Welcome to The Explainer. Today, we're diving deep into Meta's latest financial report, and honestly, it's like looking at two completely different companies. You've got this absolute cash printing machine on one side, and on the other, a high-stakes gambler just pushing billions of dollars onto the table, betting it all on the future.
Okay, first things first. You just need to let this number sink in. Almost $60 billion. And get this, that's not for a whole year. Nope, that's Meta's revenue in just the last 3 months of 2025. It's just a mind-boggling figure that really shows you the insane scale we're talking about here.
So, that's going to make you wonder, right? Where on earth does this mountain of cash come from? And maybe more importantly, where is it all going? Because if you can understand that flow of money, you can pretty much understand Meta's entire strategy, why they're so dominant right now, and what this huge bet on the future is all about.
Okay, so here's the plan. We're going to look at Meta's two-part story, check out the ad juggernaut versus that billion-dollar bet, decode the bottom line, and then see why they're planning to bet even bigger going forward. Let's get into it. So yeah, Meta's two-part story, the profit engine versus the moonshot. And that's really the best way to think about it. You can't make sense of this company unless you see it as two totally different businesses that just happen to share the same name. One is this super mature, incredibly profitable machine, and the other is a cash-burning, futuristic moonshot.
And wow, this table just lays it all out crystal clear. Look at the family of apps, Facebook, Instagram, WhatsApp. They brought in nearly $59 billion in revenue and turned that into almost $31 billion in profit. Pure profit. Then, you look over at Reality Labs, the metaverse division, it made less than $1 billion but lost a staggering $6 billion. It really is that simple. One side makes all the money, and the other side just burns it.
All right, let's start with that advertising juggernaut. We've got to understand the family of apps. And when I say it's successful, that's an understatement. This might be one of the most effective money-making operations ever created, and it all starts with a simply massive user base.
And this right here, this is the foundation. 3.58 billion. That's not a typo. That's how many people used one of Meta's apps every single day in December. Just think about that. That level of daily engagement is something no one else can touch. It's just unrivaled.
So how do you turn that giant audience into profit? Well, it's a pretty simple two-part recipe. First, you show them more ads. The number of ads they showed, what they call ad impressions, jumped a huge 18% from last year. And then, part two, you charge more for each ad. The average price went up 6%, so more ads and more expensive ads. That is a seriously powerful combo for making money.
Okay, now let's flip the coin completely. Let's talk about that billion-dollar bet, Reality Labs. This is where basically all that profit we just talked about is getting funneled. It's all going into this one division that's supposed to be building Meta's vision for the future.
And just look at that number. That's a loss in just one quarter. $6 billion. That's not a typo. In just 90 days, they burned through $6 billion trying to build out their VR and AR tech. I mean, that's what they say it costs to build the next big computing platform.
And this wasn't just some bad quarter. As you can see here, this was happening all year long. The losses were consistent, a sustained strategic burn. And you can see it actually got worse as the year went on, accelerating into that record-breaking $6 billion loss in Q4.
So let's put that in perspective. For the entire year, Reality Labs lost over $19 billion. Think about this. The amount of money that one division lost is bigger than the entire yearly revenue of a lot of big public companies you've definitely heard of. It's just an almost unfathomable amount of money to burn through.
Okay, so you've got this wild situation. One side of the company is making billions, the other is losing billions. So how do you decode the bottom line? What's the final report card look like? Well, to figure that out, we first have to clear up a little bit of weird accounting stuff that makes things confusing.
You see, back in the third quarter, something called the One Big Beautiful Bill Act hit. It resulted in Meta taking this huge, nearly $16 billion tax charge. Now, the important thing to know is that it was a non-cash charge. It was basically a paper transaction, but it made the reported profit for that quarter look way, way lower than it actually was. It's super confusing if you don't know it's there.
And here's the difference it makes. The number they reported for Q3 profit was just $2.7 billion. But if you adjust for that one-time tax thing, their real underlying profit was actually a massive $18.6 billion. So you really have to understand that adjustment to see how profitable they truly are.
Okay, so with all that cleared up, we get to the actual bottom line for Q4.
a clean $22.8 billion in profit in 3 months. This number right here is the ultimate proof of how powerful that advertising engine is. It can swallow a $6 billion loss from Reality Labs and still spit out one of the biggest quarterly profits of any company on the planet. Just incredible.
So what's next? You might think after losing $19 billion in a year, they'd maybe pull back a little, right? Slow down the spending? Well, you'd be wrong. They're not just continuing, they're betting even bigger. Their forecast for 2026 shows they are getting ready to spend money at a level we've never seen before.
And Mark Zuckerberg is being pretty clear about where that money's headed. He says he's looking forward to advancing personal super intelligence. So the new frontier isn't just the metaverse anymore, it's AI. And not just any AI. Think of it like a super advanced personal assistant for every single person. This is a huge pivot. They're trying to get ahead and dominate the next wave of AI.
In the financial forecast, man, it just backs this all up with some truly staggering numbers. They're planning for total expenses to be as high as $169 billion. And capital spending, that's the real physical stuff, data centers, servers, up to $135 billion. And the main reason for all this? Building the massive infrastructure they need for these AI dreams. Oh, and get this last part. They fully expect Reality Labs to keep losing money at the same insane level as this year.
So it all comes down to this one huge question, doesn't it? With Reality Labs losing over $19 billion a year, is Meta actually building the future, or are they just funding the world's most expensive hobby? Is this a visionary play that's going to define the next decade of tech, or is it just a massive, costly distraction from the core business that pays for everything? Honestly, that is the multi-billion-dollar question that's going to define Meta's entire future.